Welcome back to Higher Exchanges. I'm your host, Jesse Redbend, Head of Investor Relations and Business Development at Leaf Brands. I'm here this week and every week with Morgan Paxia. He is the co-founder of Poseidon. Morgan, rough start to the show, but we made it.
Oh, we're doing great. I mean, you're onto something special when you break the internet when you're trying to get on live.
Yeah, sorry guys. Sorry folks if you're listening late. We spent about 20 minutes trying to figure out our audio situation, but we finally made it. So glad to be here. And also glad, Morgan, that we're not alone. I do enjoy our solo episodes, but we also have a handful of favorite guests, and we definitely have one here with us today. He is Scott Grossman. He is Vice President of Corporate Development at Turning Point Brands. He has a great Substack called The Sunday Sesh, and he is a must follow on X. Scott, what's going on, man?
Hey, gentlemen, great to be here. I'm excited to kick it off. How you been?
Been good, man. It's feels like it's been quiet for a while. Morgan and I were talking a couple of months ago, and we're like, oh, there's not a lot happening in the space. Things are quieter. We're busy with the day jobs, and so we started doing the show every couple of weeks rather than every week rather. And it feels like with the Schedule 3 stuff heating up, that finally we might be getting some momentum again.
It certainly feels that way. It's been a wild, I would say, 4 weeks since Benzinga. I'm sure we'll go through kind of the timeline. I just wrote about it, but yeah, it's been wild for sure. I've been busy.
Good.
Well, maybe we should just hop right in for get into the meat of it.
Yeah, let's do it.
Yeah. So right off the top, I mean, obviously, there's a notable amount of how would you classify it? Words and activity. I wouldn't actually call it action yet, but some of it is action, right? And so this is like something I'm always like, wake me up when action happens, because we've just seen a lot of words over the years, soon, whatever coming, and
Imminent.
waiting for things imminent, yeah. But over the last 4 or 5 weeks, Scott, you summarized this very well in the sesh. More so than I'll just kind of give a little bit of some of the things that have stuck out in my mind. We've actually had the Senate appropriations and the House appropriations getting more active. And what's happened recently is they originally tried to block Congress's ability to approve S3. Then that got pulled out, so that no longer happens. They originally had the ability for the feds to come in and raid even medical cannabis. That got pulled out. Then there was what I just always remember is the Mary Miller Amendment around banning of intoxicating hemp. That's both gone through the appropes, but they also then conceded to a 1-year stay, and now Speaker Johnson just dismissed everybody for the summer. So nothing's going to happen on that till at least September. And then we had the appropes approve veterans access to cannabis, which happened, I think, the day after the Halt Fentanyl Act, which is putting fentanyl-derived substances on Schedule 1, not actual fentanyl, because there is a medical application for fentanyl. So I just want to make that clear distinction. And then this morning we got a new head of the DEA, Terrance Cole. So, that's kind of like been my synopsis of like kind of key things, but like, what the hell's going on? Where are we? Like, what is any of this actually, is this a voting machine, weighing machine? Like, what do you think?
Yeah, it's a good question. Obviously, everyone's trying to figure that out. So maybe I'll kind of like set the stage from my standpoint, how we think about it internally. Where we left off, I think I was on your show in February, right? We were talking about why stocks were getting sold. I talked about these 4 big themes: structural issues, fundamental issues, the regulatory, which you just highlighted. Obviously, the big one, which is, I think I called it disunity back then in February. And to your point, I think we just went through a first half of the year of relatively nothing, right? Nothing from the administration as they focused on more pressing issues, no new state markets, no real enforcement on hemp, publicly at least. no material deals, no real cannabis conferences. And, in April, the remaining oxygen in the room was consumed by the tariff tantrum, you recall, which in retrospect, and I still believe this, has very little impact on our industry. And in fact, it's quite positive, especially in relative space. As you guys know, I do a lot, and I look at a lot of relative, to alcohol, certainly positive on tariffs. They have to import grain and aluminum cans. Pharmaceutical industries trying to figure out how to stand up in-sourced manufacturing. You have CPG trying to figure out how to import goods from China. And so a lot of that, we got kind of caught in that tariff tantrum. And when you throw in a few restructurings like air and cannabis and really a public spat between the largest ETF and the largest CEO of our industry, it's no surprise that cannabis stocks continue to get murdered in the first half of the year, down, call it 37% into June 30th, with most names either at a year-to-date low or retesting the April lows after a pretty dismal May and June. So that's kind of like where we left off. To your point, here we are today. I would say, man, things have changed. I would like to bring out, like, I call it the mosaic theory. It's kind of from my event-driven hedge fund days. Jesse, I'm sure you understand what I'm talking about. But at the end of the day, one event in a vacuum is typically a non-event. But when you piece together the breadcrumbs, it produces this rich mosaic. And, Jesse, excuse me, Morgan, you went through kind of like the political highlights, but since June 9th, it's just been a highly intentional, in my judgment, and highly coordinated effort, starting really on June 9th when Tyson and Jason Wilds were at the DEA, of all places. At the time, I didn't make much of it, but in retrospect, it kind of is a huge head scratcher. Like, doing that requires an enormous amount of coordination. And since then, I just think we've seen time after time after time. Weldon Angelo's on the stage with Kim Rivers at Benzinga. Then, to your point, we had in June 11th, we had the Congressional Caucus out of Nevada. Dana Titus talked about how Big Beautiful Bill would inadvertently cause states to adopt cannabis because of federal cuts. We had the governor of South Carolina, a Republican, by the way, made the case for legalizing, which was, quote, very compelling. And it was just one after the other. Regulators from Wisconsin, Minnesota, Pennsylvania, Nebraska, all chiming in. Even North Carolina Senator Tillis said, quote, "We've lost the debate," and wanted to regulate cannabis like alcohol and tobacco. And next we had Gates getting caught with potentially a real contract from Trulieve. And then athletes coming out of the woodwork supporting Tyson, Brady Cobb with Tyson on Fox and making the rounds of media, Scott Bessent blasting fentanyl. And so it's just like you can't keep up. And, if you kind of think about the last 5 weeks relative to the last, 12 or 18 weeks, it's been night and day. I don't know if you agree with that. So that's kind of my view. I think of all the breadcrumbs, I think the biggest one, in my judgment, was on June 22nd when in Texas when Governor Abbott vetoed the hemp bill, which, as you know, would have banned all consumable THC products. He also signed a bill to expand the medical program potentially, and he also called on lawmakers into a special session to pass legislation on intoxicating hemp. And so, and coincidentally, June 22nd marked the very bottom of the MSOs. And since then, we've ripped up 55% higher. And I don't think that's a coincidence. Stepping back, the way I think about it, and we could talk about whether hemp and cannabis are at odds, but at the end of the day, that really set in motion a potential legal framework in Texas. And I think you guys both appreciate it's a huge TAM, 30 million people. And whether it actually becomes a real market or not, what the governor basically did is he pushed the country now at 64% of the population has access to legal adult use weed. I'm using the word weed intentionally because we can argue whether it's cannabis or hemp. And I just think when you're at those numbers, it's become a situation where the walls are clearly closing in. And I think the market is sniffing that out for an inevitable change.
Well, I kind of like the rebrand. Let's just call it weed. Let's go back to what it was before, when we complicated the hell out of all of this with all these regulations and whatever. And Pennsylvania definitely stood out, to your point about the big beautiful bill, whatever it's called, where they I remember that comment clearly, because they are talking about trying to get this adult use going there, and citing though the loss of federal money as a reason. And whatever the reason, if it's a good initiative, that's great if that's a catalyst to get it done. But one thing I was trying to think back about other periods of time, because I feel like we've had other periods. Maybe it was like when it was my favorite acronym, SAFE. They were talking about trying to pass it in the lame duck, and it felt like there was a coordinated period then as well. A lot of chatter, a lot of things. Trying to think if there's other instances, but where it felt very close, and then got the rug pull. I know it's a very different set of circumstances from Congress and our president and all that. So it's too hard to, and too few instances to really draw too many parallels to the past. But but you feel like this time it doesn't feel, or maybe from a probability perspective, the rug pull odds are on Kelshi are, where would you put it versus this actually converting into action is part one. And obviously part two of that question though is when, because I think we were all here with the idea that it's not a if, but when. And I'm going to kind of set it up a little bit from the way I'm thinking about it a little bit, is with the president and the cycle we're in with midterms next year. Do you think this is still is this a front loaded, like trying to do this in 25, or is this we're going to kind of get teased along and feel a little bit of rug pull, but then ultimately potentially get it? Like, how do you think about this mosaic, but then also adding in the inputs of a midterm cycle, the want to win in the midterms? You know what I mean? Like, how does that play into the recent action?
Short answer is really tough. I've never been one to drive a stake in the ground on timing. I just know it's inevitable. I think what's changed, there's a lot of things that changed. In my judgment, I think the narrative internally has changed. So if you kind of flip back, call it 6 to 9 months, I think everyone was kind of bringing their self-interest to the table. I don't know how you guys felt about Benzinga, but that was, in my judgment, a lot more optimistic than I actually, was expecting. And, the narrative there seemed to shift in the sense that, you had Mike Tyson being kind of like the poster child. And obviously, I think that was highly intentional, right? Mike and President Trump clearly have a relationship. Tyson clearly has his business interests aligned with both regulated cannabis as well as hemp. And with the Trump's agenda, I think we've learned our lesson, and I think the narrative meaningfully changed from trying to legalize and get everything on the table, but it became more of trying to position cannabis to be more consistent Trump's American first economy. And again, I'm not a political guy, but right or wrong, the American first economy means to me it's more protectionist. It's creating micro economies driven by policies like tariffs and regulation. It's cutting off fentanyl and other Chinese imports. And so I think our industry did a pretty good job of trying to morph our agenda into fitting it more consistent with what Trump and his administration are pushing for, so it would become less controversial. The challenge here is when, and to your point, obviously, it would make more sense to do it around the midterms. But I honestly don't have any great insight as to whether tomorrow or next year. There are a bunch of people who've been, Mark Odes, you might have listened to that podcast on TDR. He was pounding a table on by September. I have no idea. I do think having the DEA solidified today certainly would allow that roadmap to stay on track.
Do you guys hear? So in my world, the conversations that I'm having, I would describe the consensus view amongst, I don't even know what the right term is, high level people that should theoretically be in the know. And I'll say those are lobbying groups that I talk to. Those are CEOs of large companies that I talk to. And those are people that may be advisors or other roles in the industry that I talk to. And within that group, it seems like there's a consensus view that I wonder if is being fed from up top, which is Schedule 3 before the midterms. And if people had to bet, everyone in that group, which is, let's call that group like 5 or 6 people that I can think of, that everyone here would know and theoretically should be well connected if anyone is connected. The consensus view is before the midterms, but specifically Schedule 3 in the fall of this year. And Morgan, hold on here, but safe banking gets introduced in the fall and passes in some sort of must pass year-end bill. So I say that to ask you the question, Scott, and Morgan, you can chime in too. We all may have our own opinions, which may be as valid as any of the ones that I just listed in that more informed group. But are you guys hearing anything different than that? And Scott, I'll start with you. Do you agree that that's kind of the consensus view amongst the more connected people in our industry?
Yeah, it's tough to tell. Obviously we all speak to insiders and try and triangulate what's going on. I think there are a lot of meetings going on, right? I've heard of meetings going on last week. I've heard of meetings going on next month. I just think there's a lot of paper being pushed right now and trying to align on the core issues and timing. But to be candid with you, I don't have any more insightful thing to say in terms of timing. I don't know what you think, Morgan, what you're hearing.
Yeah, I mean, I appreciate people continuing the effort for sure. I just hope they're getting to the right and new and different audiences that have not been given the proper time to educate them about it. I mean, you even mentioned, I think it was a senator from North Carolina or whatever, that said we lost the war, basically on drugs. Instead of it being position of this is a winning opportunity, they're talking like it's a losing opportunity. So to me, there still is like this reservation issue. All that said, I largely don't think it really matters what anybody beneath Trump thinks. And anyone that tries to put a timeline on it has no idea, because it's really going to come down to when Trump says, should he say, get it done, then it will get done. But until then, I just don't see why, like Terrance Cole, I know he said it was supposed to be one of his first agenda items. We've heard that kind of stuff before. And until it comes from the top and says, do it. And so I think he's, either he feels like he's in a charitable mood for cannabis, or is he feeling like he's using this for, political reasons, who knows? And so could it be this fall? Sure. But I think more likely than not, it could be next year, but I have no idea. Nobody knows. And I really think it just comes down to him and when he feels like it's the right time to do it, and everybody else will fall in line. It's like everything else that's happened since he's been reelected is when he says to get it done, then it gets done. And, people will position things around, the fringes in the meantime, which, like I said, that's why I say it's good. People appreciate the work is being done. And, Tyson being seems like seems to be a center point of a voice for our industry, and he's buddies with Trump. And so that's helpful. But I don't know what more to create a point of action until he just deems it to be so. I don't know.
Yeah,
Jesse,
I agree with that completely.
Yeah, I guess when I think about it, guys, I don't want to belabor this point too much, but I'm guessing if I'm spending nights thinking about this, probably people in our audience are too. And what I get hung up on is when I think about the timing, it's like there's been a string of action that you guys have described, and everyone from the athletes to then, some of the advisors like Scott mentioned saying this makes sense, we should do this now. And then right after that, you have Cole getting approved today. And so part of me thinks that if Trump put that out there, the DEA admin just got confirmed that from an ego perspective and looking good perspective, he may want to have quick action on that. Although, as I think it through, Trump specifically hasn't said anything. It's just been signaled through other people. So I guess part of me thinks that if you see this sort of intentional posturing by people close to Trump, that could be a sign that things are close, and he partnered that with the Cole news today. That makes me think something could happen sooner than later. But then on the other side, there's a good part of me that says, why not save this until the midterms? But then I say, as I really confuse myself, you're going to save it for the midterms. Why do all this signaling right now? And I think, Morgan, we talked about this a little bit with Jeff Schultz a couple of weeks ago, and your answer was valid, which is to kind of take the temperature to test how people feel about it. And that's possible. Yes. But I think that there is also some possibility that it leads to action sooner than later. And, I don't think the three of us are going to solve it here, but that's kind of the riddle in my head, is like, how do you reconcile the timing of the advisors and athletes and everyone else talking about it, the Cole confirmation? Does that mean that action, does that push people to think action is sooner than later? Or does the other more logical, less emotional part come out that says this probably gets saved for the midterms?
So let me ask you both a question. Are we big enough, is legal cannabis big enough to shift the national landscape away from Epstein?
I thought it was going a different way.
I don't know, but I do think that we've missed one big key, is all the raids that are going on, all the Chinese farms up in Maine. We're obviously going to talk about California, what happened there. I don't know what you're hearing, and obviously I'm not going to disseminate, any material public, but I talk to my customers all the time. I'm in a ton of markets. There are raids going on across this country, not only farms, but distributors, and there's just a lot of confusion. And so going back to, again, the American First Trump agenda, whether he moves forward or not on what we want, he's already implementing a lot of the initiatives that we care about, right? We're trying to get unsafe, unregulated, untested weed off the street. We're trying to create a pro-business economy for an American economy that is not reliant on other countries. And so regardless of what the regulations are, he's already taken action. And I want to make sure that, and that's stressed, that we have seen movement, regardless whether it's actually a rubber stamp on a piece of legislation.
Just real quick on the rating thing, are we? And these are outside of Glasshouse for the moment. These other runs you're talking about, like Maine, I heard, in Massachusetts, and we've seen some others. Those are all just illegal operations, right? They're not licensed operations. Right. Okay.
That's my understanding.
Now, yeah, I think so too. But Obama he used to do this a lot too. So are we like even back to where he was, or are we still kind of catching up to that level where they used to be a lot more active and then it just really died away in Trump 1 and certainly under Biden. So are we just kind of doing some catch up? I haven't tracked it enough, and I don't know if you have.
I think it's a combination of both. I think there's we back to like the key points of what he's trying to do, right? He's trying to close the border and the whole fentanyl conversation. I think that's related, right? I don't know if it's a catch up or because we haven't had much enforcement over the last, call it 12 to 18 months. It's hard to tell, but all I would say is the volume has definitely increased. I think I talked about it back in February with you, or perhaps a different show. But there's just a lot of disruption going on in the channel, right? You have distributors who are selling, anything from toilet papers to tampons to rolling papers, but they have a shelf they just have no idea whether they can sell it tomorrow or not. And so I just think the volume across the industry has been massively turned up over the last, call it 3 to 6 months. And it seems to be filtering up and being very very consistent with what Trump's agenda is trying to do, and they seem to be aligning.
Do you have any read through on the glasshouse issue, Scott, as it relates to federal reform, or do you view that as an independent action that's not related to the other, signals we're trying to unscramble?
Yeah, I mean, I think the theme that I'd like to leave you and your listeners with is I think this is all highly coordinated. I don't believe that Glass House being raided was just one off. I don't know who caused it or why, like it doesn't really matter, but the fact is it happened. And it's the largest or one of the largest, farms in the country. And I just don't think it was a coincidence, right or wrong. And so I think, again, it's all lining up to all these breadcrumbs are leading into, the temperature's getting really hot in the pot is kind of how it's set. I don't know. What do you think, Morgan?
I mean, I think there's a few aspects in play. One way to think about it is similarly to how when Canada legalized and went into a regulated market, they went after and hit a company that was proven guilty, right? Can't trust and shut them down because they wanted to set the standard that we're not going to be okay with illegal activity. I don't know if there's anything obviously innocent until proven guilty. But the other aspect that is very acute to California is the amount of activity with ICE being here. I live in San Diego. There's every day on the news, basically there's ICE is being active, and they're active throughout California. California's labor, its agricultural economy. This is a long history of, folks that do come here to help us eat food because they come in and work here. But, so there's a little bit of it feels like a little bit of a national versus California situation that goes far beyond cannabis, but we just happen to land in the freaking bullseye, in that situation. So I don't, it's hard to know, like, was that more of the weighting factor? Was they wanted to make an example and really showcase if there was actually, a provable instance of undocumented, underage, whatever it might be, if that is proven true. We don't know. And we'll see in time what comes from it. But that to me feels like a little bit of a larger weighting just because of Trump and Newsom really not getting along. And this was an exploitable situation. But man, did they really, if this all, like, regardless of what actually happened, I mean, it still is, the timing of it was just too coincidental, I think. But Jesse, what any?
But if you were gonna switch momentum on cannabis and you were going to champion Schedule 3, and Trump has always voiced support for medical cannabis, and I haven't seen him voice support for recreational cannabis at all, or certainly not as much if he has. Well, I guess in Florida he supposedly did. And so I wonder if he was going to start saying more publicly positive things about cannabis, would the glasshouse situation make that look more positive or more negative? And in my mind, it seems like a bunch of negative publicity towards cannabis, when I'm hoping that we're going to start saying more positive things about cannabis. So I'm trying to kind of reconcile those two pieces.
Yeah, I agree. It's hard. Yeah, go ahead, Morgan. I'll jump in at the end.
Sure. I think to me, it's kind of like again, assuming that there was wrongdoing here, is you want to make an example so that when you do make the shift, there's fear, right? To abide by regulations and do things properly. I've talked about this almost endlessly on higher exchanges, is the lack of enforcement has been very concerning, because it does allow for slippage and bad decision making. And so if you're going to champion a rescheduling and potentially opening up a door to a regulated market, you want people to do the right thing. And if they cut corners, they're going to get in trouble. And you want that fear so that people will respond appropriately in a regulated market. So that's, I guess, the positive way that I look at it. But I don't know, Scott, what do you got?
Yeah, I agree. I do think it's obviously inconsistent. That being said, it just seems too highly coincidental. I'm not sure what to make of it. It seems like obviously there could be another shoe to drop, but the timing the issue at hand, the parties involved, Newsom versus Trump, it just seems too hard for me not to kind of link those all together.
Yeah, I think that's fair. So the idea being, let's crank up enforcement so that when we soften things, which I don't, it's not like Schedule 3 is legalization, so I'm not exactly sure,
I
like,
know.
what from a regulation change as for legal operators, what's what's actually going to change that they need to send a signal of enforcement about. But I guess I guess the two competing thoughts are that the enforcement is showing we mean business. So if we loosen things up, everybody might play by the rules. I guess that's your guys' perspective. I guess my counter to that was that it makes cannabis look bad. Like when I have guys with the glass house thing, I don't know what your experience was, but I've never had so many people reach out to me from different parts of my family and my world. And my son is 15 and he was sending me TikTok videos of the ICE raid. My Aunt Sandy is 82 years old and she was sending me the New York Times story. And so I say that to show that it really resonated nationally in a negative light. And so again, we don't need to belabor the point, but my thinking is that you just made cannabis look really bad. If these charges are correct, we made an example out of Glass House, and then if in short order you showed that you were acting more favorable to cannabis, people might look back and say, well, look at this thing you just showed me over here that you said wasn't good, but now you want more of that.
Mm-hmm. Yeah, I don't know if I have anything meaningful to add. I just think it just put a spotlight in the industry. What we've seen is, being in the news is good news, whether it's good or bad. The fact that we are getting attention, national attention across the stage, in some way, shape, or form. Obviously, people are going to get hurt, but I think at the end of the day, having the conversation is going to move the agenda forward. Being ignored is how progress kind of stalls, and so
Yeah.
any news is good. Any news is news in this industry.
Do you want to jump into the next segment, Morgan, a little bit and talk a little bit about what happens if and when we get Schedule 3 and what kind of stuff you might want to own? So,
Let's do it.
Scott, when I think about it, the landscape has changed in the industry, and I think about maybe a year ago when a lot of us were I was pretty bullish back then based on a few things happening. One was we thought Florida was virtually a certainty. I think all of us were around 80% probability on that. We thought Pennsylvania might be done sooner than later. And most importantly, we thought Schedule 3 could happen more quickly. And it was that combination of growth with reform that was getting the institutions that I talked to excited about investing in cannabis. So here we are a year later revisiting the conversation, and now we're saying, well, Schedule 3, once again, might be getting closer, but the industry has changed, broadly speaking. There's certainly selective pockets of growth out there. I think it's worth touching on those, but more broadly, if you look at the forecasts for the larger MSOs, you're talking, mid-single digit growth at best this year, and we'll see what next year brings depending on Pennsylvania. Big mid-single digit growth, as I say it out loud, I think is optimistic for 2025. So the growth story has cooled down. The reform story is heating up. And so, Scott, what's your perspective on if the Schedule 3 announcement were to happen sooner than later? What would the reaction to the stocks be? And would this ignite something that was meaningful or lasting? Or do you think this leads to a short-term bump and then people recognize some of the other problems and that stops us from having a longer, more sustainable rally?
Yeah, great question. I think we have to go back to February. We talked about the structural issues of this industry, not a lot of access to the capital markets, it's retail only, the Canadian listed on the pick sheets for the most part. I think ultimately it's really going to depend on the regulations around FinCEN and exchange uplisting. I think that's, for that in my mind, that's how you get real new money coming in. That's when you get institutions looking at it. And obviously you've had a few guests who have an opinion on this. I certainly have mine. I don't necessarily know that listing is completely tied to Schedule 3, meaning if Trump says, hey, you know what, this is crazy that Canadian companies can list in the United States. This is crazy that these American-led 500,000 people working in the industry don't have banking. All of these things that we wrestle with potentially could be divorced from actual legislation with a wave of the pen. Now, I think it's harder than that, but if that came out, if Trump said, hey, we need to uplist these, there's part of me thinks that that's actually a possibility. And if that does occur, I think you have a very wildly different investment mandate or landscape, I should say. Putting that aside,
but let me stop you there. How do you see Trump orchestrating uplisting? Because I always think of that as being something in SAFE, or SAFE gets passed and then it gets added, afterwards, or something along those lines, going back to the Climb Act and all of that. So I'm curious how you think Trump interfaces with uplisting.
It could be, going back to what we just said before. If Trump wants it, it's going to get done. So maybe it is part of SAFE, maybe it's an executive order, maybe it's a clarity on the Cole memo. There's like a whole number of ways it could actually happen, but I think if he wants it to happen, it'll get priced in, and I think ultimately that's what's needed for a real lasting change in the capital markets. But I think if whatever you think of Trump, he prides himself on being a businessman, right? And all of his policies today have been predicated on making the economy stronger. And again, you might not agree with these, but whether it's tariffs or crypto, securing investment from the Middle East and Japan for AI and energy, reducing regulation, even the more controversial ones that we just talked about, like the ICE raids, there have some economic component to it. And, FinCEN and uplisting and safer banking is all very consistent with that agenda. The question is, I think you're asking the question is like, how feasible is that? How can we actually get there sooner? I don't have a crystal ball, but I think, that is really what's going to drive. I think that's the real catalyst that everyone's trying to figure out, because if that happens, then I think it's a different ballgame entirely.
And do
we need safe banking if we're rescheduled? Like the whole idea of banking regulation was because it was trying to create bank access to a Schedule 1 substance. I know rescheduling is not legalization, but I mean, to the point of like Trump could just tell the exchanges, list these companies. If you want to list them, there's nothing coming from the federal government. Go ahead. And like,
I think that's complicated, right? Because it's still a federally illegal, right? I don't know what you think about that, Jesse. My view is like, if whatever he wants to get done will get done. The question is like, how important is it for him to actually do it? I think the heart of your question is from like, what are you supposed to be doing with these names, right? Since I don't have any idea on timing, I think all the regular themes that I talk about all the time, like the bifurcation, the winners and losers, I don't really think that's materially changed. I will say though, and just look around the room, and I think what's really fascinating, and I talk about this kind of like on my theme of how I'm actually allocating capital between safety. I call these things spiffs, which are just basically moonshots, and stupidity in areas that I know pretty well. Just look around, right? I mean, Open, Quantum, all these names that are trading like options are becoming these nihilist situations where the retail investor, i.e. cannabis investors, are just absolutely gravitating toward these spiff situations. And in the event that there's if there's an actual way to buy these companies, right? Remember, not a vast majority of these retail investors still can't invest in our names, even though they're in pick sheets, because the platform doesn't allow it, whether it's Fidelity, etc. If that were to unlock, I don't understand why you wouldn't want to own a GTI trading at 3 times versus an Open. I don't know if you guys are following that situation, versus an Open trading at 15 times revenue, right? I mean, they're all kind of similar situations, but the difference is that there's absolutely no liquidity. And so if that gets unlocked, I think all bets are off, and I think it'll be an interesting situation.
So I've been talking to a bunch of Oh man, my echo is
my
my mic is echoing, so apologies if you guys hear this on your end as well. We've been having some problems with the platform. This is brutal. But I'm going to continue. So Scott, most of the institutions that I speak with are either out of the space, meaning they've sold their stocks, or they're in the space, but they're not allocating currently. Like you just don't see the big institutions, or not the big institutions, but the big cannabis allocators putting more money in at this point. If we get Schedule 3 and there's signs that reform is going to pick up and be lasting, what kind of things do you think that people will want to owe to that environment?
Nothing's changed in my view. I think the best of the best are going to be the first ones bought. Obviously, we take like a GTI, right? I think you call it like reform dependent or independent, right? A GTI being 30% of the ETF, there's no sign that if we get a headline right now, the MSOs is going to be bought, right? And so obviously, GTI is going to get a lion's share of that capital. What I've, thought deeper about, because a lot of time has moved, right? And in our industry, it feels like, what's the expression? Like every year in cannabis is like a dog year. A lot of time has changed since I came out with that kind of like the bifurcated winners. If you kind of go through the list, what's fascinating to me is a couple of things. 19 out of 73% of the MSOs portfolio trades less than $1. That's just insane to me, right? That's 24% of them. And now you talk about value. 24% of the value are effectively penny stocks with very liminal nominal value. A couple other points to kind of highlight. Air is now trading 25% higher than when it hit the wall and it missed a payment. Think about that for a second, right? So when we talk about moonshots or spiffs, I've actually taken it one layer forward because of the time that's tagged, right? I think if you have 75% of the industry that's trading like penny stocks, if you dive deeper, there are actual companies that actually have taken the medicine. Cannabis, Terrance. These companies actually have kicked the can down the proverbial wall, for a couple of years. And so within the bombed out names, there are names that actually have a lot more duration. And I think those are way more interesting setups if you were to go out on the risk spectrum. I've talked about it in my stack, but I think cannabis is an interesting one. Trading at, what is it trading at? Like 7 cents, right? They kicked the can down for 2 years. They have 2 additional 6-month extensions. There's $315 million of debt, which is the fulcrum security. Roughly $25 million of cash if you include the $5 million sale from the remaining license in Florida. But subsequent to quarter close, they took out $4 million of cost, which is on top of the $23 million that they took out. They have good state exposure to New York, Ohio, New Jersey, and now Delaware. And it's 1% of the MSOs portfolio. And so on July 10th, no surprise, the ETF bought over almost 500,000 shares of that thing. And I think they're going to have to buy it again because there's nowhere else to go. And so my exposure, again, I don't obviously traffic in customers or MMPI. I'm obviously staying very public here. I'm trying to find asymmetric names that have a lot of duration. And so if I look at it like, let's say, a cannabis versus an air, I think those are 2 very different stories. Air is going to take the pain cup, but cannabis largely took the pain already. And so I think if you have a good understanding of each specific company, which you both do, I think there's another level. There's haves and have-nots, but within the have-nots, there are names that have way longer duration and ones that don't. Does that make sense?
It does. But I would think about that in the context of sizing, Scott. Meaning, I think that in general, I
in
think
in
cannabis
general, I think
investors have
cannabis
been too
investors have
aggressive,
been
and
too
that's what's led to
aggressive, and that's
a lot
what's
of
led to
larger losses in some
larger
cases.
losses in cases.
So I'm curious how
So I'm
you think
curious
about
how you think
position
about
sizing
position
relative to a
sizing relative
cannabis
to a
versus a
cannabis
GTI.
versus a GTI. Yeah, that's the holy grail. I think of things in risk units, obviously the underlying volatility. And so at a simple level, the safety bucket, the non-reform dependent, way bigger. And when you're investing in, say, like a spiff that has a 3, 5, 10 multi-bagger opportunity, your position could be 1/10 the size of your core position, but it can act and give you exposure to the event that you're playing for that gives you a ton of convexity. What I'm trying to solve for is you got the risk-free rate, call it 5%, right? It was at zero, call it 2 years ago, 2.5 years ago. I'm not a huge fan of beta, never have, never been. But if I can create a portfolio that mimics kind of like a convertible bond that gives me some semblance of bond floor, but on the events that I have high conviction in, that have moonshots, now all of a sudden I'm creating a security that has ice yield with enormous amount of convexity that I'm just not paying a lot for. And so that's how I think about the world, and I do that in cannabis, but I also do it outside. And that's been my North Star certainly this year, and I don't see much to detract from that thesis going forward.
One last question, then
One
I'll
last
throw it over
question,
to
then
you,
I'll throw it
Morgan.
over to you, Morgan.
Do you think
Do you think
institutions, Scott,
institutions,
or
Scott, or
I scratch my head because
scratch
I
my
get
head
comfortable
because
using the
I
word
get a couple using
institutions
the
because
word
I think that the
institutions
next
because I
wave of
think that the
capital is
next wave of
probably
capital is
smaller, it's
probably
probably family
smaller,
offices and
family
smaller
offices
funds,
and
maybe
smaller
not true
funds, maybe not
institutions.
true institutions.
Do you think those more
Do you think those more
sophisticated, larger
sophisticated,
investors
larger
will
investors
dip into
will
these
dip into these
more
more
debt-laden, smaller
debt-laden,
names like
smaller
cannabis
names
that you
like cannabis
mentioned?
that you
Or do you
mentioned?
think that
Or do you
capital
think that
goes to
capital goes to
GTI,
GTI,
Curaleaf,
Curaleaf,
MSOS because
MSOS,
that's
because
what has
that's
the
what
liquidity?
has the liquidity? Yeah, I think you hit the nail on the head. Personally, I'm sorry to cut you off, Morgan. I think they're going to need liquidity, and they're going to need, it's going to take time for them to ramp up, right? If you have I'm making it up, if you have $1 billion portfolio and you're putting $100 million into Canada, you just can't do that today. So my judgment, the really large institutions like the consumer investors who are all the space because they're trading alcohol, they're trading tobacco, they're trading CPG and staples. As they think about the next 5, 10 years as this being part of the portfolio, my view is the way these institutions are going to get in are through, secondary or primary offerings. It's not going to be just buying stocks in the public market. So it could be recapitalizing some of these companies. It could be an anchor investor in an M&A situation. It could be providing liquidity to some of the management teams who have been there for 10 plus years who need liquidity. And so I personally think that's the way that the big institutions are going to get involved. It's effectively like a re-IPO if you think about it, because they're on the pink sheets, and as they go up listing, they could do some sort of capital raise to ensure the balance sheet, etc. That's my view on how the big get involved. But in terms of like the $50 to $200 million family offices, I think they'll buy stocks outright, and they'll probably start with quality.
To your point on the more time has gone on, right, since February, obviously, just as one measurement period. Thinking about some of these companies as options, there's been some option time to decay, and especially with
100%.
pricing headwinds, the balance sheets getting more strange, like you mentioned, I think you're missing payments, and we know others that are defaulting on things, and they continue trading. But to your point about sizing is just because you're like, the common might be zero, but if we get the event before it goes to zero, it could still 10x is kind of the way to summarize that.
Yeah, I mean, just going back to cannabis, again, the equity today is about 12% in the enterprise value. And so if the stocks run, they're going to run, right? And so, look at GameStop and Open this week, and they're going to be bought by the ETF. And so they're going to be relatively price indiscriminate in the beginning. And so just to kind of give you an example, right? Cannabis is run rating around $35 million of EBITDA with some cost cuts. If they, I'm not underwriting this, but if they got a 12 times multiple, again, remember where we were in 2021, we were at 20, 25 times. If they got a 12 times multiple and those cost savings came through and Delaware kicked on, 12 times $50 million, that's a 55-cent stock. Stock's at 7, right? So if I'm wrong, what am I going to lose? Air just proved that if he actually hits the wall, it goes to 20 cents. So maybe I lose 7 cents, maybe I lose all of it. But if I'm right on the event, you're talking about 8 to 12 times upside. And so going back to your question on size, do I want to own one, half a unit of GTI and half a unit of cannabis? Of course not. But if I feel confident in my safety and it's recreating that bond floor with some growth, and we can go into GTI and why I think it's cheap in a second. But if I can layer on some convexity, then I start getting a really asymmetric portfolio with very little downside. And that's what I'm trying to solve for. Again, cannabis is one thing, but cannabis is a sleeve and a much larger portfolio. And I just can't get that exposure anywhere else. What am I going to do? We'll buy open at 50 cents and pray it goes to $4 and I have no edge on that. That's just not where I'm going to make money. And I think everyone has to figure that out for themselves.
Do you ever, this isn't going to be too applicable to a lot of our folks, but do you ever look at where the secondary debt trades?
I do all the time. Again, credit leads equity. Just at a high level, you asked me about, I think we're probably going to go into like M&A. Credit spreads are unbelievable across the board. We've had bond issuance up about 5%. The capital markets are enormous, very healthy. We've had, a resurgence in the IPO market, whether it's CoreWeave or Circle or Reddit. So the capital markets are open. Going back to your particular question on like secondary debt, they still trade pretty tight, right? Like, most of the non-reform dependent names trade relatively tight. Now, they're wide relative to their staple and alcohol peers, but they're not trading like they're stressed or distressed names, in my judgment. Some are, some aren't. I don't know what you're saying, Morgan.
Yeah. No, similar. I think we justifiably traded higher than the alcohol group or whatever, because EBITDA for us is just a brutal metric.
Yeah,
relative to actual cash flow and servicing of these debts. Some of these tier twos, to your point about doing like a disaggregated convert, almost, is you could buy some of these secondaries at like what, 55 cents right now, and truly have like that, kind of base, and then add in your own convexity with buying it at 7 cents, and still be first in line for when a restructuring or something could happen, and potentially get almost a turn more on a secure position. Just curious how you think about that.
Same concept. It's just really hard for retail investors, myself included, right? I'm not technically an institution when I'm allocating my personal capital. It's just hard to buy debt, right? And so I would also argue that, again, if you're trying to get exposure to the frenzy, it's unlikely that the debt is going to move like the equity, right? And so it's the same concept. It's just a way, it's just, my judgment, it's just easier to express it in the equity.
So Scott, I'm hearing the echo on my side. I think everybody else is hearing it too. So why don't we just leave you with a couple of questions to answer here, and then we'll wrap things up due to technical difficulties. But I do have two closing questions, and I'll start with this one. What's the biggest risk you see that no one is paying attention to?
I'm worried about the ETF, to be candid with you. I don't see anything that's on the horizon, but just given the magnitude of the ETFs and the relative liquidity of the industry, if that were to be an issue before we get all of this good stuff that we've been talking about over the last hour, that's certainly a risk. Now, I think it's a temporary issue, but that's obviously on my mind. Company specific, listen, I think everyone who's doing their homework is trying to figure out Glass House and whether there's another shoe to drop. I happen to be, pretty vocal about my position in Glass House. I was in the warrants, again, very consistent with what we've been talking about the whole time with convexity. And just given, again, Morgan, what you said about time has moved, since I bought the warrants in April, a lot of time, 3 months out of a 12 to 15 month duration warrant is a lot of theta. Theta is the decay of the option. And so I've been taking the opportunity to move back into the equity because I said I wouldn't own the equity until a press or refinance. So those are kind of the two biggest things. One's like an industry specific risk, which is the ETF. And the second is just my portfolio, which is Glass House, and making sure that there's not another major shoe to drop.
And on the flip side of that, Scott, is there any sort of opportunities you're seeing that others aren't talking about that are being ignored?
I don't know if they're being ignored because I'm kind of like my own bubble. So I feel like if I put it out there, people are seeing it. But I'm paying very close attention to what's going on in Staples. I'm paying very close attention to alcohol and CPG. I think the headline here is alcohol continues to implode. Now, they're not going to zero. I don't want anyone thinking that no one's going to drink a beer for them, but there's an enormous amount of pain going on. And with Staples and alcohol, as you may remember, they were the ones who took massive pricing during COVID and huge demand behind it. And now that's kind of unwinding, right? We see CPI, we see commodities coming off, we see a very discerning customer. It's very hard to create brands. And so I'm paying a very close eye to what's going on in those categories. The reason why I bring it up is we've always, pegged cannabis to being proxy or comparable to these industries. And so when you have challenges underlying the core derivatives of cannabis, it's just hard to get the multiple, right? If you thought GTI was worth 15 times 4 years ago, when Staples were trading at 18 times, now Staples are trading at 11, right? So that's something that I think people should pay attention to. And it's coming at the perfect opportunity, in my judgment.
Well, great, Scott. I think this is a good place to leave it. If people want to subscribe to your Substack or follow you on X, how would one do that?
SRG44 on Twitter. You can find me on Substack as well. I have a link in my Twitter bio. It's all free. I do put out some quarterly Sunday sessions, as you know, in the industry. That will always be free. At times, I put in some portfolio adjustments, and I put that behind a paywall from those kind subscribers who magically subscribed, and just give them a few weeks to digest what I'm putting down. But yeah, those are the best ways to get me, and I look forward to engaging with everyone.
Well, great, Scott. Appreciate you coming back on the show. Always appreciate you sharing your thoughts. Morgan, always good to talk to you. Apologies, everyone, for the technical issues. We'll see if we can get those sorted out, although they seem to be on the host side rather than our side, but we do apologize for that. I know it's super frustrating to listen to, but thank you all for listening. Thank you for watching on YouTube, and we'll talk to you again soon. The views expressed in this podcast are provided for informational purposes only. Nothing we said should be considered research or recommendation. All investing involves risk, including the loss of principal.